Good morning, everyone. I'm Catherine Ross with TheStreet here at the NYSE with Jim Cramer. Jim, how are you?
I'm very good, Catherine. How are you?
I'm doing well. Okay, what's scaring you the most in these markets right now?
Well, I have to tell you that when we get as oversold as we were, when we get numbers and stock that are bad and stocks don't go down, whether they're Facebook or Masco, you're kind of de-risking the market. And I think that the weapons of mass destruction, the ETFs, the algos, looks like they're taking a break. So the only thing that scares me is that somehow Apple disappoints or says something bad about China. Because the only thing between us and the end of the year is Apple and tariffs on Apple. You could say tariffs on Nike and GM. I think that GM is very interesting. If someone upgrades it tomorrow, maybe you sell it. But Apple, GM, Nike are the last three things that can really hurt us. And it starts with there's double angled Apple. Apple maybe missed a quarter, and then Apple maybe tariffs are extended to them. And that's it between now and the end of the year, because the midterms, I now think, are such a toss-up. And there's going to be people who say that if we get Democrats win the House, that we typically, the gridlock's good. And there are going to be people who say if the Republicans and the Senate reach continue to take the House and the Senate, that the defense stocks are going to be very good, and that others, that maybe there's more tax cuts coming. Remember, the crucial thing that I'm now thinking about, and Ben Sato did some great work doing work with me for Mad Money, is that we have a huge amount of debt that is going to be for sale because we have to fund the deficit. And the only way to really fund the deficit is keep growth going. Okay, if we keep growth going, this is Larry Kudlow talking, if we keep growth going, then the tax receipts could help us with the deficit. But if we stop the growth and they keep selling bonds, then we're going to have higher rates and lower growth. These are the things that I worry about. But first it's Apple and then it's rates.
So I'm glad that you mentioned Apple, because I want to do a little bit of a look ahead. I want to look ahead to Apple's earnings and get what you think will happen when they release, which is tomorrow on Thursday. What do you think?
I think the service revenue will tide over any sort of weakness that we see. I think that the buyback will make it so that if you sell the stock now, you might get a chance to buy it back lower. I don't know. We do not. It's not a Facebook, Amazon situation. The stock's still high. I say own Apple, don't trade it. But I am also cognizant that I've been very positive on Amazon. People hate me that I stayed positive on Amazon, but that's all right. I've been positive for 1,000 points. So I've been positive on Apple since it was, 25. So I'm not going to vary. I do like this service revenue stream. If that slows, Katie Huberty's done some great work in Morgan Stanley about whether the service revenue stream is going to slow, then that will really hurt the stock more than a shortfall of cell phones. I'm putting it in the negative. I just want people to be, I don't want anyone to be me saying buy Apple before the quarter, as I'm not saying that. Be very, very careful about these things.
We also have two other big earnings, and that's on Friday, and that's Alibaba and that's Kraft. Do you have any thoughts on those?
I don't like Kraft, but anything can happen there because it's so low. And there have been a lot of talk about whether Kraft has to cut its dividend because Budweiser had to cut its dividend. I don't think that's the case. They have a lot of cash flow. So I'm not that worried. Alibaba, I think Alibaba can be great, but I will not recommend any Chinese stock. And I want people to understand they need to Google Pence Hudson Institute October 4th. Pence Hudson Institute October 4th, where they laid out the policy of containment with China. And containment with China means the administration doesn't want any business done with China. And when you have a situation when you have no business done with China, that's going to slow down the Chinese economy. It's already starting to roll over. And that means you can't own Alibaba. So in other words, it's going to go up, but it might be the last good one.
So I got an email in my inbox for an Ask Jim.
And how do people get a hold of you? What if they
So people can tweet at me at Catherine ROOSS, or they can email me at catherine.ross@thestreet.com. Now, this particular one was an email, and I found it really interesting. Karen wants to know whether or not you think that Brinks is a buy because they agreed to transport cannabis.
I pressed them hard on that, and they didn't want to do it. But cash is growing at 6%. That stock's down a huge amount, and it shouldn't be, Catherine. the deal they just did was great. That's just a really good stock to buy here. I know that people feel that MasterCard was talking a lot about cash, paper to plastic. Paper's still used, and I think that Brinks is a terrific buy. People don't like it right now, but I'm willing to go against that tide. Karen, good email.
All right, Jim, I want to talk to you more about your thoughts on Facebook and on Amgen and Anadarko, but I'm going to save that for the Action Alerts Plus video, which we will do right after this.
And that's what we'll do.
So thank you for all of your insight. Guys, have a great day. I'm Catherine Ross with The Street. Keep up with The Street for all the earnings.